Very excited to have Terry Papineau back to talk us through the Q1 Cameco conference call, which again just gave groundbreaking insights into this industry. Welcome back, Terry.
Nice to be here. Just wanted to say hi. I'm back in the Turks and Caicos, and I'd like to shout out to some great friends, new uranium investors that I met here in Turks and Caicos. So François Bouchard, Marie-Ève Bergeron from Terrebonne, and François from Bromont. So big shout out to them.
Excellent. The uranium community just continues to grow as people realize the fundamentals of this space and learn more about it. So I guess, first of all, what was the big takeaway from this conference call?
Well, I think we need to contrast that to their last conference call, which related to Q4 of 2021. And, Tim Gitzel came out and said, it's time. The tone was just positive right from the beginning. They talked about adding pounds to their contract book, a big ad for even, the first month of this year. This conference call was a little bit more subdued, I would say, but with confidence. And what I mean by that is I think that the message that the Cameco is trying to give us is that although they haven't added more pounds to their contract book, now because of the huge shift in geopolitics because of Russia's invasion of Ukraine, the whole uranium sector is kind of flipped on its head in the sense that because Russia controlled 39% of enrichment, 27% of conversion, and 14% of the supply of uranium. And now countries and companies are trying to look for new suppliers of these services. There's been a huge pinch in the fabrication and especially enrichment. Enrichment has improved a lot. The price of enrichment has improved a lot. And I think Cameco is seeing now that that's going to trickle down into the price of conversion, and it's going to trickle down in the price of uranium. So now the message is that they feel that they're really in the driver's seat right now when it comes to signing long-term contracts, and they're being strategically patient. That word was used throughout the conference call, and they're being strategically patient because they're seeing that the price for uranium is going to go up. They said on multiple occasions that they're looking for market priced contracts and that's going to have a positive impact on their margins, which means that they're really foreseeing that the price of uranium is going to go up. So I think that's sort of like the general sense that I got from the conference call. What about you?
I absolutely agree with you. So like you said, they're in the driver's seat. They're waiting for the market to come to them. They know the power they have, but they're also being extremely disciplined in their supply. They absolutely refuse to accept lower prices because they know the market is going higher. That's kind of where their head was at. They're seeing this Russian replacement demand, which is causing a bit of a panic as the supply chain starts to get more and more kind of expensive and disrupted due to, people moving west, right? That's kind of what they were saying, more demand moving west.
That's exactly it. And I'd also like to give credit where credit is due. Probably the best mind in the space is Mike Alkin. And he used to talk about this profusely in 2017, 2018, 2019, talked about geopolitical risk over and over and over. And it's like he had a crystal ball. And this is exactly what's occurring right now. So, because there was cheap material coming from Russia and Russian controlled states or entities, we mentioned they controlled 39% of enrichment, 27% of conversion, and 14% of supply. Now, the world is scrambling to try to find alternative ways of obtaining all of the material in the fuel cycle. It's had a huge impact on enrichment, and they're expecting that it's going to trickle down to conversion. And so, yeah, I think that's really the main message of the conference call.
Exactly. It's good to know that they are staying strategic and they're being disciplined. And pretty much allowing the price to rise organically, and they're not selling into the spot market, right? So they're kind of waiting for those long-term market contracts that utilities are willing to pay now, higher pricing than just like whatever's on the spot market, because utilities don't buy uranium from the spot market, right?
No,
So
very few times do they do that. They might make a few purchases when they have a specific need, but the spot market is traders mostly. So and Cameco has really repeated over and over and over and over that they don't sell on the spot. They have no intention of selling on the spot. They mention over and over and over that they're not going to take pounds out of the ground until they have homes for those pounds. Even in their restart plan, they're going to be producing less than what their licensed capacity is. So that's really not their intention. Now, in terms of talking about how disciplined they are, in one of the questions, I think it was the third question, and I don't know if you had the same interpretation as I did, but Grant Isaac was talking about how disciplined they've been, and how important that is for a producer. And I kind of got the sense that he inferred that not all producers are disciplined, without naming names.
yep.
And then he talked specifically, I found this very interesting. He talked specifically about what we've seen in the uranium market over the past 2 weeks. We had the spot price, that increased from $43 sometime in February to around $64. And then in April, we saw that kind of fall dramatically by about $10 to around $53, $54 a pound. And all of the uranium equities, just were dragged down with that fall in the uranium price and the spot price. And I found it interesting that he was talking about being a disciplined producer, and then shifted right away to what happened 2 weeks ago with the price of uranium dropping by $10. I'm sort of inferring from that, and I may be completely wrong, but I'm kind of inferring that he might be taking a shot at a producer here that may have dropped some pounds in the spot market at a lower price and drove the price down. But I'm not 100% sure here. He didn't specifically say that. I'm just inferring that.
Yes, you're absolutely right. They did talk about kind of how producers might be less disciplined, especially in kind of the deeply red markets last week. It's just all across the entire financial world. Everything was red. Maybe people needed to raise cash, but I guess they're not expecting any sort of downturn in the spot price. They're expecting it to rise, because they actually put up this slide which kind of shows and speaks to the growing supply demand deficit, right? And the gap that needs to be filled long term. Do you have any commentary on that, and just kind of like where the future is for this space in terms of the supply demand deficit?
Sure. Well, in their financial statements, you'll see that both Tim and Grant are saying that, this setup in uranium is like unprecedented. Like, Tim Gitzel keeps saying that he's been in this industry for 4 decades. He's never seen the setup for nuclear power, the demand for nuclear power, better than what it is today. And the catalysts just keep coming at us daily. So in their financial statements, they talk about, in the US, the National Opportunity to Restore Uranium Supply Services in America Act that's been put in the Congress, where they want to secure their own supply. There's money there, $6 billion that's been put in the budget to protect nuclear power plants in the United States from shutting down. Talked about numerous countries and companies that now want to move away from Russian supplied uranium fuel services because of this aggression against Ukraine. Talked about the situation with Sprott Physical Uranium Trust, just mopping up all the pounds on the supply and on the spot market, and numerous comments about how thin the spot market is and how quickly it can be moved because it's so thin. Talked about the UN climate change 2022 report where they're saying they're stating that nuclear is a great alternative to replace fossil fuels. In Japan, the new prime minister is talking about, maximizing their nuclear capacity to reduce emissions. The same thing in China. They've just announced they're already on a huge nuclear build out, but they just announced that they're adding another 6 nuclear power plants to their plans. South Korea, the new governor there, is reversing the nuclear phase out and now wants to move to rebuilding their nuclear industry and exporting that to the world. In the UK, Boris Johnson is now, all of a sudden, in the last few months, he's like the champion for nuclear power, where they want to build 8 new plants at a pace of 1 per year. Poland announcing plans for 6 new power plants by 2040. Belgium announcing an increase to they're extending the lifespan of 2 of their newest reactors. Finland, they've got a nuclear power plant that was just successfully connected to the grid. France, as we know, plans to build an additional 14 new nuclear reactors. India, agreements in principle to build 10 new nuclear power plants. So, I mean, that's not taking into account what's happening with small modular reactors. Agreements all over the place. Bill Gates, Warren Buffett, with TerraPower building a small modular reactor in Wyoming. In Canada, there's an agreement between provinces. Cameco is involved in this as well. So, I mean, on the demand side, it's just been phenomenal. The setup is just outstanding. And then what they're stating, and they have a slide that actually said that the risk is shifting now to the utilities. The supply has been at risk. It was decimated because of just a brutal 10-year bear market. There's been no new investment in exploration or building new capacity. It's going to take a lot of time to bring that capacity online. There's been discipline demonstrated by Cameco, the world's 2 largest, Cameco and Kazatomprom. So, and that can be just brought online quickly. And even if they were able to ramp up to maximum production, it wouldn't be enough to meet future demand. So, the setup is perfect. And Cameco has been extremely disciplined. For uranium equity investors, the ride is extremely volatile and bumpy. And, you need to have fortitude to be able to, to see the bigger picture. People know that I'm not a trader, so I'm in here for long term. But I mean, it's tough to see the portfolio decimated by 30, 40, 50% over a couple months. But it's also quite enjoyable to see it rise dramatically when sentiment shifts and money starts pouring into the sector. But all in all, the demand and supply picture remains the best that it's been since I've been in the sector since researching the sector since 2016.
Exactly. You're right. The setup is like truly fantastic because you have exponentially rising demand around the world. We just got confirmation today that Cameco refuses to accept low prices for their uranium. They're being very disciplined. They're going to stick to that. We can be confident in. It's kind of like it reminds me like the diamond company in South Africa, where they kind of control the supply, but they keep the supply scarce above ground so that they get higher prices. And so Cameco is in an amazing position right now as everyone's moving west. I guess the utilities will not want uranium sourced from Russia, even if it's not sanctioned. I guess they're going to move west where it's more expensive. And so we have the biggest producer pretty much allowing the market to organically rise. And it just seems like kind of an obvious conclusion at this point.
Yeah, well, their job is to create shareholder value. And that value was decimated in the last 10 years. Utilities had it pretty easy in the past 10 years with access to extremely cheap material, no investment into new production capacity. So now Cameco, their job is to try to take advantage of that situation and maximize profits for shareholders. And I think that's what they're doing. And I think they're doing a pretty good job of it. Now, in my opinion, the main story takeaway here is that, there's been a rush from Western utilities and even Eastern European countries and utilities to look at every part of the fuel cycle. And they looked at fabrication first because that's what they're going to take delivery of momentarily, in short term. They looked at enrichment. So enrichment has gone up in price. They kept mentioning that conversion is going to be next. So there were questions related to their conversion capacities at Port Hope. I guess the information provided was that Port Hope, they're seeing a lot of interest in that business. Port Hope is not at capacity yet. I don't think it's been at capacity for a while, and they're looking at ramping up to capacity. So there's been talk about that. They even mentioned that Orano, one of their partners, is also looking for conversion capacity as well. So I think that we can expect to see pricing for conversion to increase in the short term, and to be able to meet the rising demand for enrichment and conversion in the West, because Russia controls a big portion of enrichment and conversion in the world. So those prices are going to increase, and they talked about overfeeding. So basically the only way to meet that rising demand will be to overfeed. So that means somewhere down the line, which I think will be in the short to midterm, the price of uranium is going to the demand for uranium is going to increase because of that. And so the price, that's going to have a really positive impact on the price.
Absolutely. And so, yeah, I think we're seeing a little bit of red in the market today. Obviously, who knows what happens short term? We just talked about the long-term setup. You, I know, are all in on uranium, explorers, diversified portfolio, brilliant. And so just as we close out here, do you have any final words?
I think the final words are that there's the last conference call was like there was really, it was like, listen, it's shifted now. That was the message. Now it's like, we know it's shifted. There's a confidence here that they're really one of the very few, Cameco now is one of the very few alternatives because of what's been happening geopolitically to be able to provide services uranium throughout the fuel cycle. There was also discussion about their investment into global laser enrichment. And so, they're strategic. They're seeing, they've been here at this for a long time. They understand the market. They know where it's going, and they're positioning themselves appropriately. And they're just confirming that I think the uranium sector is a pretty good bet and a pretty good place to be right now.
That is what they confirmed. Well, thank you so much for stopping by and giving us an update and your analysis on that call. Really good commentary, very exciting for the uranium space.
It's my pleasure.
This discussion is for informational purposes only. Please consult a certified financial planner when making any decisions about investing. And do your own research before making any decisions. Investments are risky, and you can lose lots of money in them.